Hi, thanks for tuning in to our Practical Nerds weekly podcast. I'm Shub, and together with my partner and co host Patric, we normally invest in founders in design, construction, renovation, and logistics technology. Many of our friends in the ecosystem wanted us to start a podcast on the built world, and in return, we decided to honor their request with a show about nothing at all.
Hey Patrick, so when you and I were discussing what we talk about on this episode, it happens often enough, but we're feeling pretty existential in the sense we were struggling to come up with a topic that we hadn't already spoken about and where you and I could just shoot the breeze for some time. And so in keeping with the very existential nature of how we felt, the closer, what did we come up with, Patrick, as an
Yeah,
idea?
we're going really existential here today. So you and I are going to think it live, which we haven't done recently, about what is the scenario of AI in this world and its impact on architecture, engineering, and construction that would present the biggest threat to our existing portfolio and our future as a company. So we're literally going to debate this live. You and I have not talked about this recently. I'm sure we talked about it maybe a year and a half ago the last time, but
Yes.
not since then. So yeah, that's what it is. Do you have a launch-off point?
So, in typical VC fashion, the easier launch-off point is always to shoot off of your portfolio companies and not put yourself on the line. So, should we do that, or should we be slightly different there and start off by putting ourselves on the firing line first?
It's interesting. I hadn't considered that. So I guess in my mind, I was almost more I don't know, more top down. Let's do that because that could be quite informative for me how I think about it too.
You mean talk about how it might affect us?
Yeah, with the portfolio companies first. Let's try that method first.
Okay. Interesting. Now, look, to give a full flavor, so our portfolio companies cover many different geographies and many different kinds of business models. We have SaaS companies in there. We have, let's call them software platform companies or software infrastructure companies.
Yeah.
We have marketplaces, cloud manufacturing firms,
logistics,
fintech businesses.
A little bit of offsite, robotics.
Little bit of robotics, yes. That's right.
Yeah, you mentioned fintech. That's right. Yeah.
Yeah. I think that covers most of it. I'm sure we have a much longer tail of other business models, but let's work with this. Maybe I can start. I'm trying to think. So let's say if we take marketplaces and cloud manufacturing models. Now, okay, so what is worst case AI, by the way? Is it AI and the manifestations of AI that exist today, or should we also conceptualize the different forms AI could take, say, a few years from now?
Yeah, I think for me it would have to be like world shattering, really changing how. Let me propose an alternative method here, Shub, just how my brain is wired to react to this question. Your and my business depends on one thing. And that is, and people would now think, oh, I know what Patrick is going to say. It's about raising capital or it's about selling shares. No, that's not where I was going. It depends on one thing, and that is customer buying solutions in construction. And the solution could be a software, it could be an outcome from a marketplace, it could be an outcome from another service, it could be a financial service. But in the end, if you have no markets to purchase the solutions that technology enables, there is no business here, neither for the founders nor for us. So that's where my brain is immediately wired to go is, okay, what would be the most existential version of AI that takes away the need to purchase solutions? That's where I'm going. And So what I'm about to say, I realize that this has a heavy dose of confirmation bias in it, but I stand by my conviction, and that is construction is made of atoms. It's about moving atoms, stacking atoms. And ultimately, if people need to live in houses, if we need infrastructure, etc., we will keep doing that. We will have to keep doing that. So the disruptive part to that would not be AI. The disruptive part to that would be I forgot what the name was in Star Trek. It's been like 30 years since I watched Star Trek, but where they can basically materialize food out of, regenerate, is it Recombinator or something, or regenerate food out of I don't know, some mush paste into atoms. So if someone, I know you're a big Ancient Aliens fan, right? So if someone could actually restack atoms in a way that is non-mechanical, the way we do it today, that would be disruptive to the kinds of solutions that you're buying in construction. I mean, the whole construction industry as a whole overnight would stop to exist. That would be disruptive. I struggle to see how AI is going to do that to the moving and stacking atoms part of construction. So when it comes to outcomes, the processes, the workflows, machines, men, material to do all that, I struggle to believe how AI is going to take that away, which would be that would be like the worst case scenario on that front. At least I don't know how that resonates with you, but like the purchasing of outcomes.
Yeah, I think the situation you described, where you, I guess, manifest food or manifest products without their constituent material being right there in front of you. If at all it can be solved, I imagine it could be a problem that is eventually solved by ASI, artificial super intelligence, rather than AGI, right? I think, and I guess, digging a bit deeper, again, by no means am I an AI expert. I'm sure regular followers of Practical Nerds know this, but I at least don't think it's a problem that AGI is capable of solving. I guess if ASI becomes a mainstream thing, widely adopted, then I think a lot of, at least from my side, bets are off the table, because then you're probably going into frontiers which we honestly don't know. It would be kind of imagining what, say, someone in the 14th or 15th centuries, asking them to imagine what life in the 21st century might be like, because you're expanding the frontiers of intelligence and what can be modeled, etc. So again, how close are we to ASI? I have no idea. I think that, in my mind, is not a mere computational problem to be solved. It's also a hardware problem to also be solved at the chip level and so on. So let's, for the sake of our discussion, maybe eliminate the possibility, or not consider the possibility that ASI is happening anytime soon, or ASI is not mainstream anytime soon. So we maybe get to a level of AGI.
We can only eliminate that for the time being, or not consider it, because we don't have stock shares of an AI company to sell, because otherwise we would have a very strong incentive to promise it next year.
Yes, that's correct. That's absolutely right, sir. Yes. So I think, keeping AGI in mind, I'm at least of the opinion what can be achieved through AGI is rapidly computing or taking decisions off of data, maybe especially large amounts of data, maybe actual production methods. I'm not convinced. AI maybe can interpret it better, can form decision making that guides production methods better, but maybe not directly intervene in the actual production method, which will probably have to be solved, for lack of a better term, let's call it the conventional way. Or by conventional methods themselves might be improving as a result of AI, but AI itself is not doing the production, if you know what I'm trying to say.
I mean, that's exactly where I struggle with that too. And that's just there. Look, the most first principles are all physics. And so until you tell me how the rules of physics, how we know it, can either be bent in a different way or how they are wrong and get replaced by another one, until then you will be bound by these rules. Okay, or you're the believer in the simulation theory and it's all just a big matrix problem.
Yes.
Also fine if that's what you want to believe. But until you do that, you will be bound by the laws of physics. They are the first principles, literally.
Yes.
And that's what construction operates against. So that's where I don't see the AI, I don't know, call it black swan or the worst case scenario play out. So if it's not that, and there will be still, let's say, outcomes, purchase, there will be processes that have to deliver those outcomes. These processes can be made or need to be made more efficient. And for that, outcomes will have to be purchased. So that's good. So within that, then what is then the worst case scenario, Shub, in your mind? I mean, you and I, we're not role-playing this right now. We literally haven't had this discussion recently.
So look, I imagine intermediaries or persons, agencies who are involved in, call it production line, supply chains, because their whole reason for existence is there is vast amounts of complexity in the supply chain, in the data, in who knows whom, right, in who manages whom. Again, I'm making a generalized statement here. Not all ecosystems are the same. Some have more unstructured aspects to them. I think over time, the roles of such intermediaries, I think, will diminish in importance and significance, because in let's say construction supply chains or in production lines, the reason why these folks have been important is they sort of manage these hyper local relationships, are kind of aware, hey, if this happens, I contact so and so. If this other thing happens, this is what I need to keep in mind. It's like a decision matrix for different situations, which you can plug into, which is tribal knowledge or wisdom. And I think, okay, you seem to disagree. So let me allow you to jump in.
Not necessarily disagree, but I wonder one thing. So I think outsiders, and I was guilty of that in 2016, 17. Outsiders, looking through the glass wall into construction, then entering construction their first year, they tend to think, oh, it's inefficient because not everybody works on the same software, or because not everything is standardized, and communication is so poor. No, it's a trust problem. You could literally put all of these on the same platform, but that would still not solve trust. It would still not solve trust and track record. It would also still not solve working capital and inventory in order to deliver more just in time. So
it would not solve for working capital.
Right?
Yes.
So I guess the closer to AGI version that can help orchestrate that better would be a more automated marketplace then. That would get rid of the intermediaries. Like to that degree, I could subscribe to what you said, but I know where people are going to take this, and they will distort it to extraordinary degrees where they say, yeah, then I can orchestrate everything.
Yes.
Which I know, people can look this up. We wrote about our thesis in 2018, how we think the orchestration, it's literally the term we used, how we think the orchestration of the construction sector will play out. This was 4 years before OpenAI came out with the first public, or let's say at scale, large language model. And I still think that thesis is correct. It's actually playing out. But when people tell me, okay, that is going to play out because AGI is here, and then all of a sudden they take command of everything, and that's how everybody gets orchestrated, I think that's the reason. Track record, trust, working capital, and inventory, etc. It is not going to be like that. But a subset, I mean, maybe the AGI version is marketplace is the proof, and now I build a more automated marketplace. Is that what you're thinking?
Something along those lines. I think what I was thinking was even a lot of companies will also have, for example, teams or people just to reconcile accounts or reconcile transactions to make sure everything matches, for example, right? There'll be folks who will, and this is a thing, Patrick, even in mature markets, there'll be designated document checkers.
Yep,
right?
many of them.
Yeah, and I know it because I myself once used to check a lot of drawings, right? It used to be half of my job description many years ago.
In a way, it still is.
In a way, it still is, yes. Only the nature of the documents have changed, right?
Oh, this is sad.
Right? And actually, the sad and ironic part is, you're right, in many of these setups, the reason why there's still so much inertia against replacing it with technology or automation or AI is you sort of always want a person to catch hold of if something goes wrong, right? In fact, someone pitched me a similar solution like that not too long ago about automating checking of errors in drawings and so on. And, we even had a question on why the whole thing can't be driven through an authoring solution or a BIM solution. Why do you need like an independent thing to check? And the argument provided, which is fascinating nod to reality, is because of how in certain markets like the US, the liability system is set up in a way where always a contractor separately has to do their independent thing to be held liable, right? Exactly. So it's fascinating the interplay of this, where you obviously know there's inefficiencies, but you always want this mechanism of being able to seek recourse from a human or a company, etc. I wonder what sort of equilibrium AI finds over here.
Tja. But we're talking about the worst case, though. I mean, is the worst case that an even vaster platform like Procore could emerge that is so accepted by everyone, every stakeholder in a project, that they get their instructions from that platform, they send back to that platform? Is that the worst version?
Not necessarily. Not necessarily. So perhaps you have also seen this. I think, and maybe this is still a discussion topic. I think about a year ago, a narrative started that through AI, through platforms like Cursor, etc., it's now become so much easier and less demanding to actually create pieces of software. That the claim was that, hey, now it's not valuable to build SaaS companies anymore through AI, etc. And actually, the future is all agents, AI agents, right? That's where the future is at. It's not SaaS companies.
Yeah, I had that in my LinkedIn feed once or twice.
Yeah, I think that was. I remember that definitely being a very big thesis points by some of the let's call them well-known VC firms in Silicon Valley. Putting out those thesis pieces, etc. I think now it's not spoken of as much. You know what's truly fascinating, Patric? I think some of the biggest deployers of AI agents are very well recognized SaaS companies like Salesforce, etc. I mean, for those of you who don't know, I encourage you to check out Salesforce's website and how extensively they've deployed agents and actually have been deploying AI agents for a while. And I wonder if the counter thesis is, and this is another thing we have spoken about in previous episodes, what if AI is just like the internet or like water flowing through pipes and taps and so on, and whoever just offers the best distribution, they'll just take over the beneficial effects of AI as well. All it does is it inhibits new software companies from coming up because the existing companies accumulate the unfair advantage of reducing cost of incremental features.
I can see that already happening in the big bathtubs that exist. So Salesforce is a huge bathtub system of record for, customer interaction, customer contact information, customer information, etc. Microsoft is a huge bathtub for multiple things. SAP is a huge bathtub, and so on and so forth, right? In construction, there are multiple companies that are bathtubs, but they aren't ubiquitous bathtubs along the life cycle of a project, right? So you would have a bathtub for pre-con, you would have actually that is incorrect. You would have a bathtub for 2D and 3D design along the pre-con process, but not for the other parts of pre-con. Then you would have a bathtub in the US or two bathtubs in the US for construction execution. Let's call it like that, or at least large amounts of the construction execution. But there isn't a unified one. There isn't one that even within just pre-con and con is unified. So it's not like that. So I struggle with the assertion that, hey, they are going to take over because they are the dominant player, because that has happened with, for example, Salesforce. Salesforce is so much more dominant in the accounts that they are on a relatively broad process. I do think that will happen to the bathtubs that we've just referenced, but I don't think they are big enough or ubiquitous enough to then say, hey, and that's by default why I'm going to take all of the construction or all of the pre-con. I don't think they are that just yet.
Yes, I agree. Yeah.
Now, what could happen is that someone PEs or M&As bathtubs together and deploys agents on top. I do think that world exists. You know, you and I, we chose not to go with the M&A topic today, but okay, I guess here we are.
You know, not to short circuit the discussion, but I guess speaking about portfolio companies or construction tech companies in general, and seeing the direction we are going with, you know, the impact AI may or may not have on them, I wonder if you know, viewers and listeners of this episode will accuse us of confirmation bias. And I think the best way to test if that's the case, perhaps, is to put ourselves in the hot seat and ask ourselves how AI might affect us.
It's easiest to do with the portfolio companies that move the needle the most for us.
Oh, sorry, allow me to clarify. What I meant was not to represent a third-party view, or maybe in this case, a second-party view. Imagine what AI could do to fundamental itself.
Yeah. I mean, Mark Andreessen got a lot of flack recently for saying, hey, VC is the last job that AI could ever take because, you know, it's intuitions, it's empathy, and it's relationships. Which in principle I'm not disagreeing with, but I think it was very similar to a lot of stuff that comes out of that part of the VC bubble and its propaganda. Oh my God, I need to make sure. Not as thoughtful as I would like it to be. Let's go with a euphemistic version of what I was about to say. Why does VC exist? So VC, and sorry, by VC, I should say early stage VC. Can we focus on that, Shub?
Let's do it.
Yeah. So why does early stage VC exist? Because otherwise the acquisition of capital would be very opaque, complex. It would require you to make a ton of calls with very, very, very low conversion, even lower than you already have. On the capital allocation side, you would have no distribution channel. I mean, one way to think of VC is it's gas stations for oil companies.
Okay.
Now, I don't know if you ever thought of you that way, but here you go, I guess.
That's an interesting analogy. This is actually a fascinating analogy. Yes.
It's gas stations for oil companies. So you actually have to efficiently, let's say effectively. I don't think VC is efficient at all.
Yes.
Effectively allocate capital into high quality. Well, sorry, the companies that VCs think deserve it the most. Let's put it more generic that way. And then the differentiation of which gas station to go to should ideally have added benefits. I deliberately don't call it value add because of your and my opinion of our own profession and all of us as professionals in this industry together is not very high. So let's not call it value add, but that would be the differentiation. And that differentiation is delivered in a vessel, and that vessel is you. That vessel is me. That vessel is not a brand. The brand is the vessel to inexperienced founders or founders who are not as prepared to make a good capital decision. Then they look at the brand and think that is the vessel. No, but the true vessel is always the person. And the savvy founders, the sophisticated, the successful ones realize that. And so the vessel to judge the differentiation is always the person, the partner that they choose to work with. That's what VC is. That's why it exists. It's literally just that. So if you can facilitate effective capital allocation between startups and capital allocators, I think you're making VC redundant. Sorry, I'm being abstract here, and we can debate now the very specifics and just pressure test that belief. I'm here for it. But I'm sticking to the first principle right now. If you can make the capital formation for the startups and the capital allocation for the oil companies effective through AI, then you're eliminating VC to a large degree.
Yeah.
Unless you're a techno-optimist that tries to tell the entire world that VCs are smarter than everyone and that's why they should be part of a government, which I am not a part of. I don't believe in that BS at all.
So, there is a part of me which wants to subscribe to this idea that, say, in a world seamlessly connected and powered by AI, there's clear discoverability and ability to interpret information, which, by the way, assuming a lot. As we know, in very early stage companies, information exists in very different forms. It's very heterogeneous, etc., and a lot is left to interpretation. But okay, fine. Let's say we put on the rose-tinted glasses and believe that AI is able to interpret information in a way which removes human bias. Now, the one part of me which is having
Hold on, I want to understand whether the word bias in this context for you is positive or negative.
I don't know. It could be both, right? So actually, okay, it's a great setup for what I was about to say, right? Now, the one part of my brain which is not able to embrace that as an effective version of what VC becomes is, I think, time and time again, not over a 2-3 year timeline, but if you allow 10, 20, 30 years to unfold, it's again and again been proven that the best returns come from non-consensus bets, right? Now, by definition, if the way investing and capital allocation is happening is through AI, I cannot visualize non-consensus investing being powered by AI, because that goes against the very grain of what AI is supposed to represent, right? Because non-consensus is supposed to be idiosyncratic, unscalable, etc.
That's fair enough, but I would argue the vast amount of capital that is being allocated is completely allocated in consensus heuristics.
So are you saying, for example, instead of all the winners, I think maybe just about 10-15% of VC firms produce any money at all, or maybe it's 20%, something like that.
20, I think, 20, 25.
Instead of the rest producing negative returns and a small handful producing good returns, are you saying you kind of have like a homogeneous distribution of returns? Is that what you're saying may happen?
Maybe what would rather, let's run with your core premise. Power law coming from non-consensus. What I'm saying is a vast portion of the capital allocation is actually not allocated that way. It is allocated by social signals.
Yes.
To the extent of FOMO in many cases. It is allocated from poor heuristics. This was successful 5 years ago, ergo it should be successful here. But then people forget that the success is actually a generational company, and those don't repeat. They have their own idiosyncrasies and quirks, etc. And yet they, human brains use that. And so that part of the market, in my opinion, can be done by AI to the same performance that part of market produces performance today.
I agree with you, but consider this. So Now, you and I, of course, have lots of opinions, colorful opinions about our VC brethren and peer group. But to be fair, what they also know, and in general, the VC profession is capable of this, is to package it very well in a very intellectually cogent argument as to why those companies are good. And where I'm going with this is, so
I'm not sure I agree with the premise, but I'll let you run with it.
fair enough. But let me take the let me be kind to our profession and say that that's
Okay.
what happens. But you're right, most of the time it doesn't. But let's say they do that. Let's say they manage to package it in nice, theoretically sound arguments.
Okay.
If that is the case, and let's say this information actually somehow being able to be read by AI to drive decision making and capital allocation. Is it possible that the sources the AI uses itself is tainted because the arguments being made to
100%.
exactly right?
100%.
By the way, for anyone saying that, hey, this is not the case, all you have to do is maybe spend an hour. And by the way, I've done this recently as a thought experiment. All you have to do is just spend an hour or two on any popular business channel, like say CNBC or any of these other channels, and just watch how large money managers come and talk about the opportunity, and then allow yourself some time and see whether they were right or wrong. So even something as clearly discoverable, or quote unquote clearly discoverable with public information as public stocks in the S&P 500 or NASDAQ, it's been proven time and time again that money managers, etc., are not able to beat, most money managers are not able to beat the index, right, with public information, right? And that is with, nothing kept private. I wonder if when you're keep relying on private companies and AI to pass through information, that information is so heavily tainted, and what you treat as quote unquote high quality sources of information to make the decision is just garbage polished up to look good.
This is the point where we should remind each other. You and I are talking about early stage investing.
Yes.
So if I were a growth capital allocator, I would be very concerned because there's literally no sourcing advantage, regardless of how many growth funds want to tell you that the companies are discoverable.
Yes.
If you throw enough money around, if you are saying, I have the biggest fund, I have the biggest, and by the way, this is my office address, etc., you will get a meeting with the company.
Yes.
Entirely possible.
Yeah.
There's no discovery problem. There's no access problem for growth funds. And there's also no evaluation or judgment problem to the degree that it is in early stage. Yes, you still have to have some proprietary sense of what this company can become, but it becomes much more legible as a company. And I can prove this. I can prove this because there is a bunch of growth funds out there that will send our high quality companies post Series B, post Series C, and later, hey, can you please fill out the spreadsheet for us so that we can benchmark you against our other companies? That's just the layman's version of let's automate analytics of the legible part of a company. And yes, then they will pretend all other kinds of things. And oh my God, Shub, let's get on a Zoom call and let's have the founder pitch us while he's playing League of Legends. And then we chat to each other and say, oh my God, I love this founder. That's just pretense.
Yes.
That's just you pretending that you have some supernatural instincts that while you see a founder for 5 minutes, you can tell whether this is an amazing founder. Sorry, that's all bullshit. I think you can read founders, but not in 5 minutes on a Zoom call. That is, you need to dedicate.
Or even if you do, you're selectively leaving out the 10 other instances where you made the wrong judgment and you're filtering out that information.
That is exactly right. Right. Now, that is not to say that I don't think a huge part of the VC job is people picking and is having instincts on people that are sometimes not very, they are just not objectively describable. That is 100% the case, but it becomes less of a factor in companies that in itself are legible. We call them obvious. Yeah. So that part to go for or to become a more efficient capital allocation between companies and those that have money? 100%. I mean, that growth fund is a distributor, nothing else.
Mm-hmm.
That's a distributor.
Yeah.
That's a gas station.
Yeah.
And oh yes, we also
It's
do founder dinners.
It's
Yeah?
an earlier stage version of an ETF. It could be conceptualized as an earlier stage version of an ETF.
That's exactly right. No,
Yeah.
but the ETF doesn't do founder dinners. Shub. They also have founder dinners. You know?
Yes, it'll be a more expensive ETF.
Yeah. Now, an early stage, and that's I think where Mark Andreessen, took his argument. That's how I had understood him. Intuition, empathy, relationships play a bigger role, and that has to do with the fact that the legibility of companies is not in the numbers or in, hey, this is the path we walked before, ergo we can walk it again. That doesn't work. In fact, I would go so far now and then hand the mic back to you. So if you ask me, hey, what is sort of the threatening version or the worst case version of this? It would have to be some sort of AI that is not vectorial, that is not statistics based anymore, because as soon as you work statistics, probabilities, you're always going to bias the model towards what has been here before versus your and my instincts trigger the hardest actually when we see things we haven't seen before.
Yes.
So it would have to be an AI version, which might be possible, right? I mean, let's wait and see. That has absolutely zero problem with that.
I would have to agree. I'm not aware if there are AI platforms or engines capable of that sort of, what's the word I'm looking for? Independent cognition, right? Which is not non-programmed cognition. I don't know if there are, but yes, if that comes in, yes, that would legitimately be the foundation of threatening early stage VC.
Yeah, and if you just basically took a statistics-based model, the way we have them today, and you just basically brute force trained it to pick up signals more of words that it hasn't seen before, then you can very easily reverse engineer it and it will become very easy to, again, become an inefficient capital allocation. Because what would you do as a founder? You would just make up more jargon that we already make up.
Yes.
Hey, I'm not cloud manufacturing. I'm this and that.
Yes. Correct. Interesting. So the takeaway. Yeah, go ahead.
Before we go to takeaway, one more just thought experiment live here. So what is the defense against this as an early stage VC?
In the sense, what's the situation? How does an early stage VC protect itself from this situation?
Yeah.
I mean, it may seem like a very simple and obvious answer, but it is to resist the urge to buy into consensus information and consensus mentality. And what I mean by that is not just, being a maverick and just randomly doing your own thing and being a complete wild card. No, that's not what I mean. It's even like training your...
You mean being a deep tech VC.
Correct.
Yeah.
Exactly. Right. So what I mean is so look, a lot of people throw around words like, hey, we need to do contrarian deals, etc. And I agree with that. I think not enough is spoken about what is the foundational aspects of what goes in, right? What's the organizational setup? What's the investment committee setup to do that, right? How is the team structured in how opportunities are discussed and how they're rewarded or not rewarded, etc. And I think not enough is discussed about that. So if you do everything else in a cookie cutter fashion or the way traditional VC is structured, but then arbitrarily just decide, hey, we'll be contrarian or non-consensus, it is not happening. I think sooner or later, either you'll anyway do consensus deals, whether you acknowledge it or not, or you'll just be a random wildcard kind of VC who just does stuff to make themselves believe that they're contrarian investors.
I just realized there is one version of AI early stage investing that I would immediately believe in. I will not say it on the air though, because I actually want to consider that a little bit further, but
Okay.
I will give the parameters. So everything that you and I are debating is over a long-term horizon of a company becoming a timeless generational version of itself that has, profitability, huge scale.
Yes.
And as such gets appreciated at the very exit of the company, so that you're investing into what is the substance of the business going to be.
Yes.
If you flip the problem and you actually say, no, I'm treating VC as maximization of share price, so that the next investor pays me a higher share price, then I believe there is AI models to be done with that. Then I think you can actually read companies in an AI way.
Yeah. I think I know where you're going with this, but I think it may also be somewhat overlapping with another discussion you and I are having. So maybe I think maybe we don't want to reveal too much of what's on the menu there.
You sense right.
Yeah.
That's exactly right. But again, I think the parameter is interesting, right? So I mean, you're kind of if you want to shoot. Oh, someone calling me here. Aha, that's my AI agent telling me that my company is about to do something.
Nice.
Yeah. So if you shoot for the substance piece of, hey, let's do an IPO, and for that I need to make all these kinds of readings and assumptions, etc. That would be my judgment. But if you're operating more like a I don't know, let's say as an example, a hedge fund, Rentec, that runs on top of a lot of AI coupled with human intuition and readings, in the end you trade share price.
Yes.
Then not Berkshire. Berkshire is different. Well, yeah, Berkshire is different, I would say.
I would say so as well. Yeah.
Yeah. All right. Good. Look, I mean, we did this live. I think we have to continue this a little bit between us.
Yes.
Well, was a good start. I mean, we let everyone just like we promised, right? So this is two chaps chatting about their business anyway, and you just get to we just record it.
Correct. That's right. That's how we roll around here.
Nice. Is chap an American or a British English word?
I think it's more British.
Ah.
Let me check that live as well.
Okay. I guess pal would be more.
Yeah.
Other side of the pond.
It is English, as in the constituent of the UK. Yeah.
Well, then I apologize for calling you an English word.
Nice. Well done, old chap. Well done.
All right, mate.
Very good. Nice discussion, sir.
Likewise. Happy weekend.
Yeah. You too,
Cheers.
sir. Cheers.